Welcome back. Next day here. Follow up on yesterday's video because I wanted to clarify a few things. So first of all, for all the newsletter subscribers, thank you so much. I think you already got the email, but I'm going to be suspending that newsletter, the paid newsletter, right now, because there were a few people that were canceling right after they received my previous spreadsheet. So that was probably not the most effective way to roll out the newsletter. And not only that, but I do want to offer this, as much of this information as freely as I can, because one of the reasons actually is I get clients from doing these videos. I don't expect to be a YouTube star. This is part of my marketing program to reach out to the community and people who need help and might be looking for a change in their relationship with their accountant. So this is more or less me showing that I think I know what I'm doing. So, offer some validity that, I do the numbers, I crunch numbers, I do research, and I'm always looking out for the best interests of my clients, and staying on top of this is extremely important. And even though my backlog is huge right now, but my clients understand that they like the fact that I'm staying on top of it. Unlike a lot of the comments I'm getting from new businesses, my accountant's hiding and they're not doing what they need to do, and they don't understand what's going on. And this is not a judgment on them. I understand it's extremely difficult right now, but at the same time, this is our job. And if we don't stay on top of this for our clients, what's the value in what we're doing here? So we just wanted to lead off on that. And so one of the things I wanted to say was, what I'm going to be doing is there is a paid version. It's going to be unlocked in terms of the formulas. The free version I'm going to post is locked. So that's going to be locked down because I'm going to post that for the public, but it makes me nervous to just throw out an unlocked version to the general public, because if it's unlocked, you have some questions and details, you can reach out to me and I can help you work through it. So I'm going to throw the locked version up there. It still works great. I'm going to go through that right now. It still works great. It might get you to where you need. It will get you to where you need if you just study it and work through this. But if you need more analytical ability, that's when you'll pay and buy the locked version on my website in the pricing page. So let me go ahead and start presenting real quick. And I'm just going to recap a little bit of what we talked about yesterday from the tax law perspective. And again, I had mentioned JJCPA because he does a much better job of really going through the legislation. He's extremely thorough, and I actually like watching him sometimes to get a recap of things. But I just dive right in because I want to get to the technical stuff. And the reason why a lot of people probably aren't getting into technical stuff is because there's still no guidance on this. And that's what I want to talk about. So in this example, employer A received a PPP loan of $100,000. Employer A is an eligible employer and paid $100,000 in qualified wages that would qualify for the employee retention credit during the second and third quarters of 2020. In order to receive forgiveness of the PPP loan in its entirety, employer A is required under the SBA, apologize for reading this, but required to report $100,000 of payroll costs and other eligible expenses and a minimum of $60,000. That's where in previous videos, we were unclear if that 60-40 split was indeed, sanctioned and allowable. It appears here it is. So in your loan forgiveness, if you haven't filed it yet, you'll probably want to use a 60%. That's what they're going to peg to whatever you put down as payroll cost. If you didn't, and in this example, this employer didn't, it said employer A submitted a PPP forgiveness loan and reported $100,000. Now you're pegged to that. So you have to disqualify $100,000 of wages before you can calculate ERTC. The problem is that we don't know how to allocate the difference. And that's what I've been racking my brain, and many accountants are racking their brains. This is the lack of guidance that's causing problems. And how do we do that? I'm just thinking out, I'm just trying to do my best to figure out Well, there's basically what I can see. I'm sure there's more technical ways, but I can't see them. But there's a high-low method, a straight line method, and an average method to calculate the remaining ERTC wages. And that's the point of this spreadsheet. This is the locked version. So I added all of this stuff just for my own, just doodling to kind of get to the wages, because I don't have, this is just a on the fly example. So let's say employee, and this is the locked version. These are the more comprehensive examples, and you could, anything in green you can update, anything in green, which will get you the numbers you need. I'm in just the regular one here. They're all functional, if you look down at the tabs. So employer one, I did the calculation based on March 13th to March 31st. That person earned 3461.54, and so on and so forth. Okay. And you could see, the methodology. If you click on the formula bar, you could see how I got those calculations. So that's really easy. You can't actually get in here because these are where the formulas are. And then here again, April, this is pre-PPP. So PPP was 50,000. They received it on 4/16. And I didn't do a 60-40 split here. Maybe this could have been 30,000, right, for payroll. But let's go with example A from the IRS, and we'll just report the full 50. This is the unknown, right? And all this is the unknown, is how to apply it. So now we're into the application. This now is the start date. Again, this is where you're going to fill in. It's going to calculate the days. PPP used is going to be a percentage, 43% of the total PPP. Again, there's a formula if you want to double check it. These are not locked in. This is the high-low method. So we have 14,000 wages. Well, this is really easy. So unlike the average spreadsheet, which does pretty much everything automatically, the high-low and the straight line might require a little bit of manual manipulation. So here, I'm just going to enter it in. And I do apologize because the unlocked version has tables so people can sort. When you lock it, you can't sort, so the formulas get kind of goofy. So just be aware of that. I just entered 1465.38. And the difference is, then I just go here and I say, well, what's this person has enough wages to cover the difference between the 21,714 and the 14,615. And you can see that matches the PPP used with the wages. And then this person, since they ate up, the PPP for the period with the highest earners, this person still qualifies because it's wages outside of PPP. This person still does qualify for some part of it. And then we're done. And that's it. So it's so fast. And then here we go here. Oops. So again, this is 26,000. That's the remaining. Okay, 26,000. So I already did that. I applied it to the highest earner. This is probably the more conservative approach, actually. So if you're nervous about it, this might be the way to go. And you could see here, because this person's the highest earner, this is the reserved wages from before PPP. And that's another question. What do we actually do with that? My logic is we don't do anything with that. There's nothing to do with the earnings in the period that PPP is received. So why should that be eliminated or disqualified? It should just keep rolling forward from pre-PPP wages. And so that's what this spreadsheet does. And you can see here, it just keeps rolling and rolling and rolling. So I'm not going to go through the other, the other two. This is the logic. In the straight line, it's, there's another field I actually put to just kind of add notes as far as, who you're going to allocate the extra, because in the straight line version, if you remember in my example yesterday, if you just do a straight line method, some people's earnings might be less than the straight line number. And at that point, you just have to do a manual allocation and arbitrarily put it to the person that has remaining wages. And that's what this is just a little note column, and you'll do the plus minuses, and then you'll add them here. So that's that. And then the average, again, is much more streamlined and much more automated. So hopefully this helps. I'm going to post this on the website. This is the free version. I welcome everyone to use it. I'm not trying to be greedy with everything, you know, with the locked version, you know, there's a lot of effort that went into this. So it's a way for me to make up for some of the huge losses that I had in 2020, and hopefully rebuild and maybe earn your business in the future as well. So with that, I need to get to work. This has been killer. So we only have another month and a half left, and my backlog's growing, and I still have a lot of ERTC work to do. So I will check back as soon as I can. Thanks again. Appreciate it. Have a great weekend.